Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, global markets reporter at Nasdaq, with daily insight on the Nasdaq-100 index, or the NDX, which is made up of 100 of the largest domestic and international non-financial innovative companies listed right here on the Nasdaq stock market. The NDX has been the barometer for U.S. large cap growth and also one of the best performing indexes over the last decade and a half, not to mention one of the most liquid index ecosystems in the world. Joining me this Friday afternoon is Ben Jones, product development specialist with Nasdaq Index Research, to discuss the top 10 constituents of the Nasdaq-100, a performance update, and we will wrap up with some March Madness, hence my Rutgers gear. I see you have your VTech gear on as well, Ben.
Yeah, it was a sad loss. Actually, the game just ended. Virginia Tech lost to Florida in overtime. It was the first game of the tournament. So I'll put on my smile today for you, Jill, but I'm glad that March Madness is here.
Yeah, and it's always fun to have these games on while we're working as well, but don't tell anyone we weren't watching CNBC this afternoon. Yeah. Let's take a look at your first slide here, and as we get an update with the constituents of the Nasdaq-100.
Yeah, so just want to provide a general overview today, and I think it's important to kind of focus on really what has been driving the Nasdaq-100 lately, and it's really the leaders, right? The top 10 holdings within the index, the top 10 constituents, and what we see is that these constituents make up over half of the index, about 53%. You can see the largest company within the Nasdaq-100 is Apple, followed by Microsoft, Amazon, and then of course, a name that is often in the headlines is Tesla. If we look at a breakdown of the industry exposure of these top 10 names, you can see what industry is really driving, and that's technology, right? So again, we talk time and time again every Friday that Nasdaq-100 really defines growth. But what's important, though, is we see representation from other industries, right? So you see consumer services and consumer goods and industrials. And so, while a lot of these top 10 names really are defined by technology, they are involved and engaged in businesses across other industries. And you can see that from a sector standpoint, and that's in the bottom right-hand corner. You can see, technology and hardware is a big driver from a sector exposure standpoint, but you see exposure to automobiles and parts and support services and general retailers. So the top 10, while predominantly technology focused, we do see representation across different industries and sectors.
And Ben, walk us through your next couple of slides here where we take a look at the top 10 constituents on a year-to-date basis and then a one-year basis.
Yeah, so if we look at performance, I think this year, at least through the first 3 months or so, got some interesting performance trends, right? We've talked a little bit about the rise of value. We've talked a little bit about how these smaller size companies have been outperforming. What's interesting this year is that we've seen one of the leaders within the Nasdaq-100, at least just looking within the top 10, is that Intel has been a leader right now, up about 27%. So you see some strong returns there. Some of the preeminent leaders from last year, right? You think Tesla and Apple, they've actually been struggling a little bit this year. You can actually see that they're in the red, down in the range around 7% or so. So that's for let's say the year-to-date returns. But again, if you go out for the last 12 months, you can just see how strong the returns have been from these different constituents within the top 10. So I selected a few of them, right? You can see Tesla has just, beaten everyone from a performance standpoint, up over, 800%. But you see some strong returns from the likes of PayPal, right? Which really kind of had that resurgence kind of right around when the whole COVID-19 pandemic started to kind of, let's say find a bottom, so to speak, with that market. But you see strong returns across Tesla and Facebook. So you can see that while this index is, technology focused, you do see some leaders across some of the non-technology industries, like PayPal, for example, and even Tesla.
And Ben, let's wrap up here with your Nasdaq-100 bracketology.
Yeah. So we of course we have to talk about March Madness and the tournament that just started today. And so there's a great article that Dorsey Wright puts out, or Nasdaq Dorsey Wright puts out right before the tournament starts, and looks at kind of the history of the brackets and the success. And what you see on the right-hand side is just the winning percentage of the different seeds in the tournament going back to 1985. So that number one seed has about an 80% winning percentage, and you can see number two, 71%, 65% for 3, and 60% for 4. You can see at the bottom, those 14 through 16 seeds, you're averaging below a 10% winning percentage going back to 1985. So what does this mean, right? And so what this means is that basically those teams that are the strongest, so to speak, have the best records, have the most momentum, so to speak, often win the most number of games, right? And so that's akin to what we see in the markets with momentum, right? By seeing those winners often show the propensity to keep on winning, at least on average. And so what I wanted to show is, kind of the bracket, right, or the seeds for the Nasdaq 100, and that's on the left-hand side, showing the top 15. You can see a mixture of names, right? You see Fox, you see Micron, you also see PayPal up there, you see Marriott. So if we look at the top seeds in the Nasdaq 100 today, just like you would see the seeds going to the tournament, that's what you see on the left-hand side using a relative strength ranking from Nasdaq Dorsey Wright.
All right, Ben, that's a great update. Thanks for joining us on Trade Talks, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.